VEO staking mechanism deep dive. Vechain just activated what they're calling the largest staking incentive in their network's history. 5.48 billion VTHO tokens distributed through December 2025. But this isn't your typical stake and earn program. This is strategic tokenomics engineering designed to completely reshape network participation. The Stargate staking platform now operates with time-weighted multipliers that reward commitment over convenience. The longer you stake VT, the higher your VTHO generation rate becomes. This creates what economists call velocity dampening, essentially discouraging short-term speculation while incentivizing long-term ecosystem building. Here's where the mechanism gets brilliant. Vechain operates on a dual-token architecture where VT serves as the value storage layer and VTHO functions as the transaction fuel. Previously, all VT holders received passive VTHO generation regardless of network participation. The Hayabusa upgrade eliminates this passive income stream entirely. Starting December 2025, only active stakers receive VTHO rewards. Non-stakers get nothing. This forced participation model transforms VTT from a passive holding asset into an active utility requirement. If you want to benefit from network growth, you must demonstrate commitment through staking. The redistribution mechanism creates a direct wealth transfer from passive holders to active participants. Those 5.48 billion VTHO tokens represent actual value being concentrated among committed network supporters rather than spread across inactive wallets. This isn't just tokenomics tweaking. It's economic behavior modification designed to align holder incentives with network development goals. Vechain is essentially saying, participate actively or forfeit your share of network value creation. Renaissance strategy and institutional positioning. The timing of this staking overhaul isn't coincidental. It's part of Vechain's broader Renaissance strategy targeting enterprise adoption and institutional investment. While retail-focused blockchains chase meme coin trends, Vechain is building institutional-grade infrastructure. The Hayabusa upgrade achieves something most blockchains struggle with: regulatory compliance without sacrificing decentralization. Vechain secured MiCAR compliance in early 2025, providing legitimate access to European institutional markets. This compliance framework allows pension funds, insurance companies, and corporate treasuries to allocate to VET without regulatory concerns. Strategic partnerships amplify this institutional appeal. BitGo provides institutional-grade custody solutions, while Crypto.com offers institutional liquidity infrastructure. These aren't marketing partnerships, they're operational infrastructure supporting real institutional capital deployment. The deflationary pressure mechanism deserves particular attention. While stakers receive enhanced VTHO rewards, 100% of network transaction fees continue burning. This creates dual-pressure tokenomics, increased utility demand from institutional adoption combined with systematic supply reduction through fee burning. VWorld v2 4.0 SE Super App development supports this institutional narrative. Enterprise clients want comprehensive ecosystem access through single interfaces. VWorld's enhanced functionality positions Vechain as a complete business blockchain solution rather than just a transaction network. The Renaissance strategy recognizes a fundamental market shift. Institutional adoption requires predictable utility models over speculative volatility. By concentrating rewards among active participants while building regulatory-compliant infrastructure, Vechain positions itself for sustained institutional capital inflows. If this institutional positioning analysis is connecting the dots for your VT investment thesis, that like button deserves some attention. It helps more strategic thinkers discover these enterprise blockchain breakdowns, and trust me, we're about to explore the price implications that could change everything. Market dynamics and price analysis. Let's examine what these tokenomics changes mean for VT's price trajectory. Currently trading around $0.023, VT has formed what technical analysts recognize as a double bottom pattern between $0.024 and $0.025. This formation often precedes significant upward moves, especially when supported by fundamental catalysts. The immediate resistance sits at $0.0285, but breaking above 3 cents opens the pathway toward 12 cents, a potential 400% move from current levels. Historical Q4 performance patterns support bullish expectations, with VT consistently showing strength during year-end periods. But here's the strategic insight most traders miss. The December 2025 Hayabusa activation creates a deadline-driven catalyst. As the passive reward elimination approaches, rational holders face a binary choice: stake and maintain rewards or accept zero VTHO generation. This forced decision creates predictable buying pressure as holders move VT into staking positions. The 5.48 billion VTHO incentive pool provides additional motivation for early stakers, creating a first-mover advantage that could accelerate position building. From a macro perspective, global inflation declining from 6.7% in 2023 to projected 4.3% in 2025 supports yield-seeking behavior. Institutional investors rotating from fixed income toward yield-generating crypto assets could find VT's enhanced staking rewards particularly attractive. The tokenomics restructuring also addresses a chronic problem in blockchain economics: passive holder extraction without value contribution. By redirecting rewards to active participants, Vechain eliminates freeloading while concentrating benefits among committed supporters. Supply dynamics become increasingly favorable post-Hayabusa. Enhanced VTHO burning through increased enterprise usage, combined with staking-driven velocity reduction, creates systematic supply pressure supporting price appreciation. Strategic risk assessment. While the fundamental positioning appears strong, several risk factors deserve consideration. The forced staking mechanism could trigger short-term selling pressure from holders unwilling to lock tokens. Market timing around the December 2025 transition could create volatility as participants adjust positions. Institutional adoption timelines remain uncertain despite regulatory compliance achievements. Enterprise blockchain integration cycles typically extend 18-36 months, meaning immediate institutional demand may not materialize as quickly as tokenomics changes take effect. Competition in the enterprise blockchain space continues intensifying. While Vechain's dual token model provides advantages, other platforms are developing alternative approaches that could capture market share. The broader crypto market environment significantly impacts all altcoin performance regardless of fundamental strength. Macroeconomic conditions, Bitcoin cycles, and regulatory developments could overshadow Vechain-specific catalysts. However, the risk-reward profile appears favorable at current price levels. The combination of institutional positioning, tokenomics restructuring, and technical support levels creates multiple pathways for positive outcomes while limiting downside through established support zones. Strategic positioning considerations include timing, staking activation to maximize VTHO incentive benefits, while maintaining flexibility for potential price appreciation. The early incentive pool rewards immediate stakers, but market timing could provide better overall returns. Implementation strategy. For VET holders, evaluating staking participation, several strategic approaches merit consideration. Conservative investors might stake 50 to 75% of holdings to capture incentives while maintaining trading flexibility. Aggressive long-term believers could stake maximum allocations to optimize VTHO generation rates. The time-weighted multiplier system rewards early commitment, suggesting immediate staking provides advantages over waiting for potential price dips. However, market volatility could create superior accumulation opportunities for patient investors. Monitor the institutional adoption pipeline closely. Partnership announcements, enterprise client additions, and usage metric improvements provide leading indicators for sustained network growth supporting higher token values. Technical analysis suggests watching the $0.0285 resistance level for breakout confirmation. Volume expansion above 50 million daily would indicate institutional accumulation supporting sustained upward moves. The December 2025 timeline creates strategic planning opportunities. Holders have sufficient time to evaluate staking positions, accumulate additional VET, and position for the tokenomics transition without rushed decision-making. Blockchain strategists, if this comprehensive Vechain analysis is sharpening your investment approach, that subscribe button needs your attention. We dive deep into enterprise blockchain developments others overlook, and you definitely don't miss our upcoming institutional adoption tracker series. Enterprise blockchain enthusiasts, Vechain's 5.48 billion VTHO staking initiative represents more than reward optimization. It's ecosystem evolution towards sustainable institutional adoption. The Hayabusa upgrade fundamentally restructures network economics while positioning Vechain for regulatory-compliant institutional investment. Whether the Renaissance strategy succeeds depends on execution timing, market conditions, and institutional adoption rates. However, the strategic positioning appears sound, and current price levels offer attractive, risk-adjusted entry opportunities for committed believers. I genuinely appreciate you investing your time with TJ Crypto World today. Your engagement drives these enterprise blockchain analyses, and I read every comment to understand which developments matter most to serious investors. Before you continue your VeChain research, check out our complete enterprise blockchain comparison analysis. It's linked right here and provides essential context for understanding VeChain's competitive positioning. Until our next strategic deep dive, keep monitoring institutional developments, keep evaluating tokenomics evolution, and keep building positions in projects solving real-world problems. The enterprise blockchain transformation is accelerating, and positioning early could prove transformational. Catch you next time, strategists!